Da, 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 da. Right, guys, just bear with me, and we'll get straight into it. Alright, amazing. Right, let me just get the link out, and then we can go straight into it. Right, amazing. So, yeah, we've sent out, well, just sent out the crypto market update. So, building up off yesterday. Now, as mentioned, I mean, we did not expect this huge move at all, especially ahead of CPI. I mean, we expected a little bit of anticipation ahead of time um, for a potential decline in inflation, but not to this extent. But here we are, we've got it. But we kind of touched light on was potential continuation in squeezing out the shorts, as well as potentially trapping in balls past this point here. Okay, breaking out and well, faking out to the top, and I'm coming straight back into structure for a larger move. That's very much in place, so we do need to be careful of that. That's for sure. So yeah, bear that in mind. Um, yeah, I mean, the sellers here did start to come in, okay, but I mean, it's still very weak. Um, Saw a very nice rebound, 618 test, 200 and moving average test on the daily. And I mean, what took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 candles to come down to that point. From top to bottom, it took 3 candles to cancel out on the way back up. Okay, so bulls are quite strong here. Um, so yeah, that's essentially kind of what we touched on. Potential fake out. Now, obviously, if CPI comes in below and it actually declines, then well, by a decent amount. If it comes in something like what we got last month in terms of relatively unchanged, um, yeah, we could see that fake out happen and then straight back into structure. Essentially, I mean, if we get weaker CPI by a good enough amount, then yeah, we're probably pushing towards that 28 plus K mark. Now, if CPI pushes up, okay, this is that fake out will happen, and if as mentioned, I mean the push up in 3 candles, you're probably going to get one huge red candle that completely cancels out all of that. Okay, so yeah, we just need to bear that in mind. Mm, 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 mm. Yeah, so yeah, let's see if we can catch anything. I mean, um, yeah, let's see if we can get anything for this European close. Might see a little bit of volatility. I think also kind of the main thing to touch on is that we are back at those moving averages. Okay, now maybe put in an extra layer of or an extra scenario that we could potentially play out. Um, mm, I mean, fake out to the top would mean that we're not too far away from that 100 moving average on the weekly. So it's maybe leading me to think that we could potentially push to that point and then back into structure. So yeah, there is obviously, I mean, kind of a segment where good enough resistance here, so we could actually breach and then come down. Could happen. Yeah, we just need to be careful here. That's for sure. Again, kind of touching light in terms of what we spoke about in the last few updates, as well as in today's update. The economic outlook, realistically, let's be realistic about the situation, is not a good outlook, right? So yeah, realistically, I mean prices should be coming down. We'll see how what the ECB does as well on Friday. Now, obviously, Christine Lagarde did say 0.5 increase, okay, or to expect a 0.5 increase. So, yeah, let's see if that plays through. We got CPI, we get the economic calendar up from the group. Um, so tomorrow's your big day. Okay, so you got UK average earnings, you got UK labour market data, um, you got US CPI, US real earnings. Okay, then tomorrow you got US PPI, US retail sales, and then on Thursday, US initial jobless claims, but the big one is your ECB monetary policy as well as interest rate decision. Okay, so yeah, it's going to be a relatively big day on Thursday as well. So yeah, I mean we've got to plan what we're kind of expecting this week. Um, through the structuring of that data coming out. They are very big data points, so they're definitely going to be moving the market, that's for sure. Yeah, I mean, last week was a good week. This month has been pretty good, to be fair. Um, yeah, being especially last week, kind of focused a lot more just on crypto than the FX space. We opened the week with some nice FX trades, and then yeah, we just concentrated on the crypto side of things just because it was Labor Week. And we was kind of the structure I was setting up was very nice, so we didn't want to miss that opportunity. And I mean, yeah, it was a good call. We saw a nice decline in prices. So yeah, we'll see how things kind of play out again. Just holding it off until that CPI comes in, really. Anything can really happen at this point, especially after that huge bounce. So yeah, we'll keep a close eye on things. Now, this was one that we were APT. Now, obviously, I mean, prices pushed right back up, so there wasn't much that we could do. But yeah, it was holding on to very bearish structure. It was just again started holding, broke out through that structure there, pushed straight back up. The trade was cancelled, but we were looking for a potential breakthrough this point, coming all the way down. It was setting up very nicely. Just Bitcoin didn't want to push any lower, so yeah, we got that compression and we got that breakout. But yeah, I mean the altcoin market, as you can see, is I mean we're going at the crossover now on some of these exchanges, but yeah, huge upswing. We're back above that 1 trillion. Um, yeah, I mean, we're really just tweeting below and above this 1 trillion mark here. um, yeah, and we have been for a while. I mean, just look at this. It's essentially kind of where we were at for. Yeah, see, one more 25 basis points, and then they're basically at their target, or their target for the year. So, but yeah, going back, I mean, just in this range, this is kind of your center point, right, which is the 1 trillion. And we're just moving above, below it, above, below it. This is some nice volume, so I guess we'll see kind of how things kind of play out here, but yeah. Yeah, some of these altcoins have absolutely flown back up. Um, yeah, just was not expecting such a huge move. Very nice buy side on Phantom. Yeah. Yeah, let's go over some effects. I'm still yet to send out a full recording, which I will do so. After this live stream has been done. What's this? The current keyframe frequency is 8.3 seconds. Note that integration errors can cause it. Okay, let's go to FX. Let's touch base. Yeah, since tomorrow's a big day. I Now, one thing I do definitely want to touch on is the crazy price action that we've been seeing from oil has just been insane. Um, Lots of volatility. It does look like we're potentially starting to get a little bit of a bottom forming here. As you can see, take all the TA off. I mean, just look at that and look at that rebound off that level. Building up on this nice structure here. Breach, a very brief breach of that trend line. Let's get rid of that. No need for that. No need for this. No need for this. No need for this. Okay, so yeah, I mean, we've reached heavily through these points, haven't we? Straight to this level here. Now we're actually seeing a very, very nice influx of buy side, as you can see here. Look at that. So could potentially look at, or potentially be seeing it rebound and push up. Like I said, it is compressing, as you can see. So yeah, we could be seeing a very large breakout on the cards. That's for sure. Bear with me. does it say? Output from settings. Key I'm just trying to quickly change some of these settings on this stream. Okay, I got you. Okay, so we got simple. I can't change anything until the stream has ended, so I'll get that sorted. I'm not sure on the quality. Let me just check of the stream. Okay, it's not too bad. That's all right. All right. Yeah. So, could be seeing a very nice rebound breaking through the top, probably pushing towards that 200, if not higher. It does look like a bottom setting in. So yeah, I mean, it wouldn't surprise me if we really do make a very strong move from this point. So yeah, potential long term long on oil on the cards. So see how things kind of play out. That was worth touching on just because of the huge kind of upswing and then down followed by a huge downswing. As kind of the dollar just flew up. Gold. Huge move. We're at this structure now, and we kind of came up and tested that order block. Nice order block test there. So yeah, I'm probably looking at potential short here. See whether we can get a bit of a nicer top forming here. Maybe pushing up a little bit more deeper into that order block, and then seeing a move back down. Hopefully to this kind of previous structure here will be nice. So yeah, but a very strong move from gold. That's for sure. Very strong move. I mean, energy's just been on an absolute rampage. Huge gap that needs to be filled on gas. Yeah. A little bit of potential kind of bottom forming here. Got a little bit of structure. 618 test, rebound. Nice. I think the main thing to also kind of notice is the decline in volume as we're kind of almost kind of leveling off, but still continuing in a downward fashion. So we got kind of that divergence now that overall volume is falling off. So a call for a potential kind of rebound or stronger rebound maybe. So could see push straight back up. This was a huge decline. So yeah, long on gas, long on oil, potential short on gold. Some nice trades, that's for sure. Now something that we kind of did touch on was the equity market. Okay, so Nasdaq, your S&P, move that back, broke through that trend line. Okay, straight into liquidity just here. See this order block, held, basically built up structure again. Came into this order block here, held the moving averages, pushed back up. This was, I'm pretty sure, a 618 test. Okay, yeah, roughly 618, and straight back down. Now we're seeing a bit of a rebound. Now just bear in mind the Nasdaq is a hell of a lot more volatile, due to the amount of tech stocks that are in it. But yeah, see kind of what levels it manages to hold. We can get rid of this. Really, don't need that anymore. Yeah, we're at this very key kind of point on a chart. Very high volume, concentration of orders. Right, so resistance, 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 broke out, held a support now. So yeah, it's testing that key level. So we're either breaking up or we're coming straight back down. So see how things kind of hold off. That's your next level. We got some volume also at the bottom. So yeah, see how it kind of holds off. It's almost, I mean, it's consolidating in a much wider range, as you can see here. So you got your top, you got your bottom, and now we're just almost compressing as well. Okay, so it is ramping up for a move. So I guess that's worth noting. Essentially, I mean, a breakthrough 13,130 is change of sentiment, I guess. Yeah, that's your structure, guys. Yeah, the S&P is going to be very, very, very similar. It's actually pushed more into previous structure. Okay, so we got that break. Let me get rid of that. Kind of have reached again. Apparently that's the speculation. So again, CPI tomorrow is very important. If that CPI figure comes down, huge upswing. Now bear in mind what the Fed's sentiment is and the market sentiment, they're completely different. Okay, so yeah, data to data, I mean, if that CPI figure comes in lower, the markets will rip. I guarantee you Jerome Powell will probably still come in hawkish. Okay, yeah, so we'll see. But the markets are on their own accord, and they're just looking at, okay, what the data points are telling me. Jerome Powell is literally just saying the same thing over and over again from each meeting to each meeting. There's nothing that changes, right? So it's still hawkish, but I mean his actions aren't really saying that. Okay, so for instance, the ECB, I mean, I do understand there is a different situation from over here in the European zone compared to the US zone, but Christine Lagarde comes in, all right, here you go, have 0.5. And has already projected the next interest rate from the previous interest rate decision, said expect a 0.5 increase. That's what Jerome Powell should be saying. Okay, that's more of a hawkish stance, whereas he's just coming in and saying, I'll expect potential increases or continuation in increasing of interest rates for longer, for higher, all of this. But it's just been the same thing for months. Okay, so there's nothing actually changed. So we're getting different data points, but what he's saying continues to be the same. That's the implication, right? As we're getting these data points, inflation's coming down. All of these different data points are coming in. All right, should be changing at least slightly what he should be saying, or at least kind of the outlook. But it's not the case, and that's what markets are just saying. Forget Jerome Powell. Um, yeah. Um, but yeah. So S&P, that's your trend line. You're kind of in that fake out zone. Um, yeah. I mean, could see about we're seeing some nice volume, or a spike up in volume. Um, yeah, things are gonna go crazy tomorrow. That's for sure. The CPI is going to be a very important CPI. Just bear in mind, in case. So we've just come off kind of a segment of weaker or declining CPIs. Then the most recent one showed basically essentially a pause in CPI. Okay, so you're now in this space of thinking, is inflation on the uprise again? Is inflation now kind of hit its bottom, right? And this is kind of the level that we're expecting. Um, or is it essentially just a pause and we're going to go straight back down? So that's kind of where we are. We're kind of in a grey area at the moment. Okay, so this CPI figure that comes out, okay, is going to be very, very important. Um, are we going to get another CPI report where nothing really changes? What does that indicate? Is inflation becoming embedded in the economy, which is really bad for the central bank, because essentially the central bank wants, and again Jerome Powell has been saying this, is returning inflation back to its target of 2%. Okay, that's essentially where central banks want inflation to be at. So if we get another pause or another relatively unchanged CPI at the current levels, where are we at? Something like 6% now, maybe. US CPI. They're going to have to come in with a lot with more restrictive policies. So 6.4%. Um, so it could be the case. Okay, interest rates need to be pushed back up, to actually push the U.S. economy into more of a recessionary kind of decline, to bring that inflation back down. Essentially, what you're doing with to bring inflation down is restrict the demand in the economy, right? So, how much is being spent? So one of the ways that you can do that again is increasing interest rates, and what does that do? It increases the base interest that the central bank lends out money to, okay, or lends out money to your high street banks, and then your high street banks are obviously having to increase their interest rates or their lending on their credit, okay, so it makes borrowing of money more expensive, okay, so if it's more expensive, less will be borrowed. Okay, so less will be invested. Okay, so naturally you get that the restrictiveness of aggregate demand, which is essentially the overall spending in the economy, and that's what brings down your inflation. But yeah, so uh, relatively unchanged, does have its own implications. An increase in interest rates brings even more. So it's the same thing. Okay, um, if it comes down again, then I mean, yeah, that's looking good for the Fed. Likely, okay, we'll come back in 0.25 next week, and then again that might be the bottom, and we might just pause for a period of time. So yeah, this month is important. um I guess every month is important. Again, going back to that point of, okay, where can we be comfortable in terms of agreeing, okay, the bottom is setting in. Where I'm recycling. Okay, so we're pushing back up. um that's inflation coming down, interest rates ultimately being brought back down. Okay, that's when things will rip up. um and you want kind of the dollar to top out, which again, arguably you can make that argument. Okay, it's already topped out. Okay, so we might push back up, but we won't push up higher than the most recent all time high. Okay, so yeah, that's ultimately where things kind of, you've hit your bottom on the economic cycle, and now we're kind of on the recovery stage. And that's where you kind of get that increased amount of spending, because interest rates start to come down, borrowing of credit becomes cheaper. um, that's where you get your influx of spending. But yeah, Bitcoin dominance absolutely flying. So this is important. Okay, we are very much still in a range. Okay, and as you can see, I mean, we've broken through. Okay, we're pushing towards that point, but this is your potential bottoming out. All right. Um, which again, so in a range, we're bottoming out, pushing up higher. Okay, so if, let's say, Bitcoin declines, this is looking like it's pushing up. Okay, so Bitcoin is holding more of the market. Okay, um, now think about, okay, so if we have this dynamic, what are the altcoins supposed to be doing? If we have Bitcoin declining, we have Bitcoin dominance increasing. Okay, that's your altcoin market declining and taking less of that market share. Okay, and that's where you start to really ramp up in terms of prices falling down. If your Bitcoin dominance is taking more market share, because essentially what that is telling you is the altcoin market is falling down more rapid than your Bitcoin. Okay, and that's where you start seeing a much larger move back down in the market. Okay, so again, something that's really worth kind of being in touch with is Bitcoin dominance chart. Um, yeah, it took me a while to um, know how to kind of really read it and put it all together. But yeah, this will really help in terms of kind of noticing little changes in the market and kind of whether, okay, I'm expecting a large move, or not really. Kind of the market sentiment, the altcoin sentiment. Is it what's called the altcoin season? Okay. But yeah, this is bottoming out, as you can see, and it's probably looking like we're going to push back up. You see how let me show you. So Bitcoin dominance, right? Monday the 9th, 2022. Um, huge push up, right? Pushed all the way up to June the 6th, 2022. Right, if we go over to the Bitcoin chart, and here, look at the decline that you get. Okay, this is where things really start to ramp up. Okay, the altcoin market is losing market share much more rapid than Bitcoin is as it declines. Right, so here, okay, all the way to June the 6th, okay, and even past that point, right? But the week after, that's where Bitcoin kind of bottoms out and pushes back up, right? But that's where you see that huge move, that huge decline. Okay, continues pushing back down. And if you take a look, let's say, let's go to could be anything really. Um, see if we can get something. By the way, Link is looking very nice. March, May. Okay, so see how um we get that decline. Okay, so you start seeing that huge move down and decline in the altcoin. So the altcoin market is now kind of, it pushes past that pivot, okay, and starts to really push down, where Bitcoin then will continue to push down, but because the altcoin market pushes down much more quickly, you get that Bitcoin dominance pushing back up, and then you start seeing that bottoming out effect. Okay, so you got June the 6th, which is essentially where Bitcoin dominance actually finds its top, and then starts to move down. And as you can see, we kind of get that bottoming. So again, kind of going back, it really does help being in touch with your Bitcoin dominance and understanding kind of what's happening. That's for sure. So push up again, maybe. That's where you could be looking at. Okay, now we're getting a little bit of a bottoming, and we see some of these altcoins kind of pushing back up. So move up here, and then it starts to push back down. Okay, that's where you maybe see that altcoin market kind of bottoming out. Now, I mean, we're in a range. It could be the case that we actually break through. If we break through, then yeah, that's potential huge sell-off. But yeah, we'll see how things kind of play out. We'll update you as things advance. So, European close. The final half an hour to European close, we are in it. So, we're seeing a little bit of a pullback here by the looks of it. Um, I think there's going to be a great deal. Yeah. Right. Okay. There isn't really much for us to take here, to be honest. Like I said, more than likely just to chill, and let things kind of play out a little bit, from here. Like, again, as mentioned multiple times, tomorrow's CPI is very important. So it could be the case that shorts get squeezed out, bulls get trapped, and then we actually move. So yeah, just be on the safe side. Something like this, that's very important. Like, this report is very important. Yeah, just relax. I mean, there's always another trade. Yeah, okay, you might miss a big move, but there's big moves in crypto all the time. Okay, so just be on the safe side, let things kind of play out. Hopefully, we can get in on some nice structure. That's the ideal scenario. Okay, but yeah, those that joined, thank you very much. Always a pleasure. And yeah, we'll touch base with you later on. We'll come back live later on for a New York close session. But yeah, guys, thank you very much. And yeah, I'll see you later.